Gold increased more than 1% today as the dollar in equity markets fell. I'm joined by Carsten Fritsch, Senior Commodity Analyst at Commerzbank in Frankfurt. So how much of an impact has the renewed crisis in Ukraine had on gold prices, and what are the other driving factors?
Yeah, I think it's a mixture of negative market sentiment, deep losses in global equity markets, and as you mentioned, the geopolitical tensions in East Ukraine, which caused new safe haven demand for gold, and also technical factors were at play here when the gold price rose above the 200-day moving average again this morning. This caused follow-up buying and pushed prices higher as well.
And Carsten, where do you see gold prices heading in the short to medium term?
We think that gold will remain range-bound in the next 1 to 3 months or so, since prices have risen already considerably since the beginning of the year. So there's some time for consolidation. We also saw renewed ETF redemptions most recently, which put the brake on continued price increase. But later on this year, in the second half of the year, we expect gold to resume its uptrend, starting ETF buying and continued robust demand from Asia, which was rather lackluster in recent weeks.
Speaking about demand from Asia, now physical demand from China has been weak recently. Can you tell us the reasons for this, and do you see it picking up anytime soon?
Yes, we have seen negative physical premiums on the Chinese gold market, which is an indicator of rather soft demand from China. Demand in the first 2 months was very strong, so maybe there was some front-loaded buying, which can explain the current weakness or sluggishness in Chinese demand. Also, the lower Chinese currency pushed up local gold prices, which also dampened demand. But we would need to see confirmation in the next import data from Hong Kong, which will be published in about 2 weeks' time, if Chinese gold demand was weak indeed. But we expect gold demand to pick up again later this year due to rising incomes of the middle class and lack of alternative investments in China. And also to look at Indian gold demand, there's a lot of talk at the moment about relaxation of gold import restrictions. This would give gold demand in India a boost if import restrictions will be relaxed, maybe after the elections.
Looking at platinum, how much of an impact has the strikes in South Africa had on platinum prices?
So far, the price impact has been limited. We see widening of the price differential between platinum and gold to roughly $150 per troy ounce last week. That has already narrowed somewhat. So actually, we would expect much stronger price development of platinum, also given continued robust ETF demand. There are still some inventories at platinum producers left in South Africa, but this should be roughly depleted now, and should the strike continue for much longer, we would expect platinum prices to rise considerably.
Carsten, thank you very much. Well, viewers, do stay tuned, and on Thursday, Ben Jones will be bringing you the next Commodities Corner. Goodbye for now.